Hello from Trenton for a review of the date and events the week beginning the 29th of August. It started with a bank holiday in the UK, so we're actually reviewing this on Tuesday the 30th. Last week markets, well, in typical sort of August holiday fashion, not too much on equities, although the Dow and S&P slipped a little bit, down 157 on the Dow and S&P down 15, which is 0.85 and 0.7% respectively. Other than that, European markets were fairly quiet. Nikkei shed 185 points, sort of reacting to the strength and then weakness in the Japanese yen versus the dollar. On that subject, dollar yen actually rallied a little bit last week, about 159 points from its low, and it's very close to 100 yen to the dollar, but the yen weakened enough to offset some of the Nikkei weakness. Sterling against the dollar, fairly quiet, up around 60 points, 0.6%, but that was the general theme last week for most of the week, with the euro also rallying, but it was towards the end of the week that the dollar really recovered its poise. The euro actually on the week was down 125 points, and that's really courtesy of the Janet Yellen speech, the chairperson of the Federal Reserve, the central bank for the United States. She delivered a speech at what's called the Jackson Hole Symposium, which is the gathering of the great and good central bankers and economists, etc. And she basically said the case for an increase in short-term interest rates had strengthened, although the timing is not altogether clear. But it appears that the CME's interest rate watch that predicts when the Fed funds rate or the Federal Reserve will actually increase rates has now risen to about 53% in December. So that is the likely time when we're going to get an increase in US rates of expected to be 0.25%. So that's the majority view now. It has ebbed and flowed. So it isn't 100% certain at all. Very unlikely it's going to be in September, although some economists still think it could be. Unlikely to be in October because of the presidential election in November. So December is the preferred month. Other markets, gold shed $17, really swooning towards the end of last week on the back of a strengthening dollar, which really most of that occurred on Friday as the dollar rebounded following Janet Yellen's comments as discussed. One market that did hit the skids as well, we've been looking at the commodity markets recently. Wheat fell 43 cents per bushel, which in percentage moves is around 10.2% on the week. There's an article in the Financial Times just underpinning that, talking about the massive crops in the likes of Russia, which is actually running out of storage, unbelievably. And Canada, where the government anticipates the second largest wheat crop in 25 years. Australia has forecast a massive crop of 26.5 million tonnes. So when you look outside and you see all these farmers bringing in their wheat crop, unfortunately yields are down here in the UK, plus you've got the world price hitting a 10-year low, so not good news. The only big producer to see a large shortfall, actually, according to the FT, was France, where there's been heavy rain has damaged the crop, which is something that my friends in the wine-growing region in Bordeaux said they could do with. They've got a bit of a drought there. That's France for you. Let's have a look at the data and events. Then it's the start of, it was the first Friday of the new month, being this Friday. The end of August happens on Wednesday. So Friday is the first Friday of the new month, so that's when the United States releases its non-farm employment change, or employment or unemployment data, simply put. Non-farm, they call it non-farm because they exclude the more volatile and seasonal farming component. But let's have a look at the data that's due out. Obviously, we're already on to Tuesday. We start with the Conference Board Consumer Confidence number, something that is a very good leading indicator. And when we continue to see those numbers remaining quite high, that's a good leading indicator as to the state of the US economy to be. Wednesday sees the first sort of precursor in the lead up to the non-farm employment change delivered by the Bureau of Labour Statistics. ADP is a private payroll company. They have a pretty good insight into what's coming out, although their number tends to be quite a lot more volatile than the Bureau of Labour Statistics, but nevertheless still a very, very good number. Wednesday afternoon, following the ADP data, we've also got the crude oil inventories. This is a weekly number, but if you recall, last week we had a significant increase in stocks where we were looking for a drawdown. But oil has recovered a little bit following confirmation that Iran is going to attend this meeting, OPEC meeting next month. So it always provides quite a bit of volatility, though, so that's a number to watch on Wednesday afternoon. Then we have the first of the PMIs out this week, some of the key ones, the manufacturing PMI from China. This is the one produced by the state. Interestingly enough, it's actually showing a slight contraction as it was last month at 49.9, whereas the Caixin manufacturing PMI is an independent report, and that actually is showing a slightly stronger number. Admittedly, it was a lot stronger the previous month at 50.6, but 50.1 is still better than the state number, which is that's normally the other way around, which is interesting. We then have on Thursday morning the PMI number from the UK. If you recall, back in July, that number of 48.2 really reacted to the Brexit news and showed a sharp contraction from the previous month. But we're looking for a rebound to 49.1 in the manufacturing PMI for the UK. We then have the ISM manufacturing PMI for the States. Slight pullback from 52, but certainly in expansion mode. Any number above 50 is positive, so a very positive manufacturing sector there. And then we finish off with the main event of the week, really, which is the non-farm employment change. We're looking for a number of 186,000. That's around the 3-month average. It's quite positive. The average for the year, I do apologize. 255, that was a big number last month. I think if we do get 186,000, I think you're going to see the probability for a rate rise in December increase further. As long as we don't get any sort of big banana skins, I think the odds are really much in favor of this December number. Obviously, interest rate products, indices, currencies, they all react to this number, so it's a very, very important number and is quite defining. It'll be certainly define the trade for the week to come, that's for sure. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.